When one is in the midst of a health crisis that has now transcended into it being an economic crisis, the activity in the country slows down, in the world slows down, and that in turn leads to depressed demand for industrial metals like aluminium, copper, lead, etc. But that's not the case if you have China in your corner. The fast recovery with which this country has been able to come out of this crisis and the way it has really boosted the economy, pumped in money, huge amounts of stimulus as well into infrastructure and construction is something that has caused industrial metals to not just rebound or recover, but actually be perched at their multi-month highs. Aluminium, copper, nickel are all now at different milestones with the fastest recovery or a very quick recovery, accelerated pace of that being witnessed, especially in aluminium and nickel in the last couple of weeks. Now, what's important to understand here, and I'm going to take all of these metals bit by bit. Let's talk about copper first. A very pliable metal. It's used, it finds usage in a variety of industries. And that's the reason why many people say that if you want to look at how the economy is doing, you look at copper. This one has actually seen one of the best recoveries since the March-April lows, a 60% rise. And this is something that's caused copper to now be perched at $7,000 per ton. A little lower than that actually. But on the LME, it did hit $7,000 per ton. This is the highest in 28 months. Nickel, now this one finds usage in the energy space, a little bit in stainless steel. But the reason why this one has seen such an accelerated recovery, especially in the last couple of weeks, is because we had the LME webinar where a lot of chatter was around EV, on clean energy, etc. So just in the last few weeks, we've seen a $16,000 per ton mark being achieved by, the metal. Aluminium, meantime, if you look at this one, it's been a bit slower in terms of recovery compared to its base metal peers. Just 30% of a rebound is what we've witnessed from March and April. So you could say that this one's sort of trying to play catch up with its peers. Again, like I said, China stimulus, China's recovery, China's massive consumption. There's also talks which have been constantly going on about another stimulus from America. There have been supply side issues as well. For example, the Chilean copper mines where miners are on strike currently. The dollar index, which is just about hovering at that 93 mark. All of these have sort of created the perfect storm for metal prices, to zoom in trade. But there's one ratio that I want to flag off for all of you, and that's called the gold-copper ratio. Now, these two do tend to make unlikely bedfellows because while on one hand you have copper, which is often synonymous with economic recovery, gold on the other hand does rise when there are problems in the economy. So why this ratio? Well, it's a good indicator of how you can expect copper to move, more importantly. This ratio had been at 3,000, it moved to 8,000, it stayed over there between 2016 and 2018, but now it's zoomed to 10,000. So this shows that, and this is by the way the highest ratio on record. So this shows that even though copper is at 7,000, it perhaps does have more room to rally.